Hello guys, hope you are all doing well today. Today we had a rather weird performance by AMC and GameStop. We saw the stock prices initially continue in their upward pattern for them all of a sudden fall flat. We are going to discuss what might have happened that caused them to fall the way they did. We also had some interesting news coming directly out of AMC. We are going to discuss all of these things in the video, so if you find any of it informational or helpful in clarifying everything that has been going on, please remember to drop a like as it really helps the channel. Remember that everything discussed in this video is my opinion and that I am not a financial advisor. I am a simple man looking for answers just like you. Without further delay, let's get right into it. First of all, AMC CEO Adam Aron came to Twitter to announce that last night, the AMC Board of Directors elected him to serve as chairman of the board, while also holding positions of CEO and president too. This news was positively received by most shareholders as Adam continues to interact and appear to listen to the needs of AMC investors. This is pretty bullish, and I am glad that Adam Aron has been selected for the role, and I wish him the absolute best. I have no doubt or reason to believe he will fail or underdeliver in such an important role. So, AMC and GameStop both encountered a change in price direction. Both stocks have been upwardly moving since Monday. The reason for that is simple, and that is that hedge funds have been allowing the stocks to move bullishly. We know that they bought a ton of call options, so this little rise was also a small attempt to capitalize on the natural organic growth that AMC and GameStop would otherwise have if we did not have to constantly put up with all the consistent shorting and manipulation. We also know that 5 million shares for AMC alone were borrowed recently, and that could have been part of the reason as to why the AMC and GME experienced heavy weakness not only after dipping, but in the recovery process as well. The reason for letting it run for 2 days before pulling the rug under the feet off of investors is to catch some of the more optimistic and overconfident shareholders that like to trade options. We know that though most people are buying the stock, many also engage in options trading. It's been a little over a month since we had that huge surge, and many people are looking for any indication of this event repeating. As such, it would make sense to manipulate the stock into looking like it is about to repeat itself all over again to get people to start throwing money at the stock only for them to stop the run and crash it. It creates confusion, losses, and to a certain degree, it might even drive some investors off of the stock after having to deal with possible monumental losses. I am not the type to say don't trade options, as I see the value that they bring. However, I will say that you guys need to be cautious about these weird random surges. Remember that we ran a month ago only because hedge funds thought that by letting the stock run, a significant portion of people would eventually sell their shares and they would be able to close out some positions. I cannot imagine the face of hedge fund managers at the realization that most shareholders were not selling their shares, and that by allowing the stocks to run so much they had effectively raised the price floor substantially. This is a big nightmare scenario, and we have seen them laboring hard over the last 2 weeks to defeat the price. This surge was most likely intended to capture investors off of their feet. They know that a lot of ambitious air is still in the room, with many people not having forgotten about the massive gains they made during that last surge, and that any indication that AMC or GME would run again will have them jumping on the ship without thinking twice. As such, it would make total sense for hedge funds to manifest an elusive price action that had many of the features and similarities the previous big surge only to trick traders. Furthermore, more evidence of this can be found on social media all across the internet, with a massive number of bots saying the exact same message with the same wording. Some are saying and telling people to sell at $100 or even $300. This is being done to slowly affect the psychology of less educated shareholders as to when to start taking profits, so that when the next surge or even during the squeeze, people start taking profits early so that the price of AMC and GME is not blown out. They want you to profit as little as possible. And now we are seeing an escalation in FUD tactics to get people misinformation so that the squeeze is less than what it would otherwise be. Be incredibly cautious and paranoid. We are at odds with companies that have trillions of dollars in assets. They know what they are doing, and just because we embellish making funny memes poking fun at their stupidity doesn't make it true. Yes, we caught them in a bad corner that they can't get out, but that doesn't mean they are simply going to give up. They will fight tooth and nail to get you guys to ease off of them so that they can try to squeeze themselves out of trouble. The institutions that we trade against are cunning, they are smart, they have suits with decades of experience in various fields ranging from mathematics, computer science, trading algorithms, social media marketing, human psychology, and much more. They will be relentless in their pursuit, so you have to be even more relentless. You need to be an absolute animal by consistently informing yourself, not getting caught emotionally betting on options because you will get clapped every time. Stay aware. Stay vigilant. Treat this as the serious game it is, and always remember that whatever happens with the stocks, hedge funds and banks have already anticipated and possibly plotted it out in order to maximize short-term profits. The only thing they cannot control is your panic sell button and the organic growth of the price floor over elongated time frames. This is why disinformation marketing is running so rampant these days. It is all made to get you to hit that sell button that they can't hit for you. Before we continue, one last thing. It is possible that anything can happen at any point. The way we regressed today in terms of price action doesn't really mean anything conclusively. It is entirely possible tomorrow we start building up again as hedge funds might want some extra profits, or we could simply continue falling back down as hedge funds orchestrate another dip. Nobody really knows what they are up to, so always hope for the best but expect the worst while buying a dip. Reverse repo operations conducted by the Fed today resulted in over $886 billion, almost reaching $900 billion in a single day. AMC dark pool trading accounted for 66% of the total volume the stock experienced today, while GME dark pool trading accounted for 55% of the total volume today. Fidelity data suggests AMC and GameStop had more buy orders than sell orders, with GameStop in particular having twice as many buy orders than sell orders. Let's finish with some technical analysis to recap how we performed today. AMC had a very weird performance during pre-market. We began with a slight bump from where we left off yesterday. Then we had a pretty big fall from almost $45 to $42. Upon market opening, the stock dipped a small bit before rebounding up to $46.55. It would immediately fall off once again, however. It would experience a small rebound, but each high was lower and lower, forming a big of a descending triangle. AMC eventually broke support and fell down almost to $40. The stock would once again have small rebounds, but each lower, and eventually closed at $40.78, which is way below the VWAP. It is no secret that AMC is way oversold at these levels, and I am incredibly curious as to see what will happen tomorrow. GameStop had a fall during the pre-market that was countered with a small run upon market opening. GME reached $195.51 before falling almost in exact fashion like AMC. The stock tried to bounce and sustain around the VWAP, but it failed to do so. The stock entered an ascending triangle pattern but broke the resistance for a small ton to 190, once again testing the VWAP. The stock failed to consolidate at these levels and instead was met with a short ladder attack that took it down below 183. The stock then entered a small bullish wedge and closed at 185.81, which is well below the VWAP. The stock is also way oversold, and I am curious as to how it will perform tomorrow. Remember to stay positive. This surge is incredibly sketchy and we are bound to experience price volatility through the process, so do try to adapt to changing circumstances quickly. As always, try to buy the dip when you find it and hold. More importantly, however, is for you to let me know if you liked the video and found it helpful down in the comments below. Your contributions and help really go a long way, and I could not be any more grateful for your kindness. Big shout out to people in my Patreon and one-time donators. Links are in the description if you want to join in helping the channel. Don't forget to drop a like on this video, and I will see you all tomorrow. To the moon.